Hey, you guys, Trisha Turner here. It's time to rise and thrive. This has always been a Tuesday morning podcast, but if you've been paying attention, I moved it to Mondays at 12 Central Time ish. And we just moved it a little over a month ago because I have a morning community that I'm running from 8:30 to 9:30. So I had to get this in here. Monday mornings at noon was like the next alternative for me. So mark your calendars every Monday, 12 p.m. ish. We are coming to you live with somebody that's going to bring you ways to improve your business, your life, based on the 4 principles that are most important in my life, being faith, family, finances, and fitness. Today, we're going to talk about finances, you guys, because, I just came back from Inman, and overwhelmingly, there was a lot of talk about credit card debt being at an all-time high, but consumer spending has kind of tapered off a little bit for a couple of reasons. Number one, they can't afford to buy anything more because they're in freaking debt. But number two, because the world is like unnerved right now. It's not steady. It's not stable. And when people don't feel stable, they withdraw and they pull back a little bit and they stop. And people are like, oh, I can't afford to go on vacation. Can't afford to go buy a house right now. But what we're seeing, if you're not paying attention to the real estate market, is that interest rates are coming down. Like the rates today are under, if you can look at them, 6.7 and below, which is freaking awesome. And what they also said at Inman over and over and over and over was that this is one of the best and most incredible buyers markets in most markets that we've seen in over a decade. And I've now been doing this for 20 plus years. I can tell you in my term in real estate, I can't even remember a time when I've seen buyers have such freaking power in the market right now. So again, you've got to get your credit in line to be able to take advantage of what's happening in the market right now. So I've got this amazing credit expert, Aubrey, with me today, and we're going to talk about that. Like, for one, if you're not in a position to buy right now because your credit score is not where it needs to be, what do you need to do? And Aubrey's going to let you guys know that. What is a good credit score? Like, what do we need to get to in order to achieve, number one, home ownership, but not just home ownership, some of these great opportunities with the interest rate. So welcome, Aubrey.
Thank you very much. Thank you very much for having me. Looking forward to it.
Heck yeah. Yes. So for those that don't know who you are, can you kind of give a little bit of backstory about you and what you've been doing for the last however many years you've been doing it?
Yeah, thank you very much. And Aubrey Kloss, I'm a regional director with a company called UQual. We help folks qualify for whatever they're trying to finance, which really most of our clients are trying to be approved for a mortgage loan of some kind. But, as a credit expert, 20 years later, been doing this for 20 years, working all over the country. 20 years later, just like, you being in real estate and any, mortgage loan officers, all of us that have any, seniority or seasoned veterans, if you will all say the same thing is no two deals are the same. And we learn from each one of them. And how we get really good at this is by doing it. That's just it. So 20 years later, thousands of clients and credit reports reviewed, and before and afters. Just this is where I've just gained, whether I wanted to or not, it's coming. I'm gaining the knowledge of credit, but I've always been very passionate, as you witnessed last week in our meeting, about sharing this information. Yep. And it's good for me to have the knowledge, but not really help anybody if we don't share it. Mm-hmm. And so I'm very happy to always just answer credit questions because everybody has them. I'm proud of being the guy that industry professionals recommend or call or email with, hey, I got a guy. So a credit question comes up and I don't know the answer. I got a guy, and I get those calls and emails all day long, every day, and I love it. Putting just like you, and this is very relative, even though we do different things, our businesses are relatively the same.
For sure.
How we operate, and it's just getting information into people's hands or minds as quickly as possible to help people achieve their goals, and working with you, whatever needs to happen.
First off, I want because I know there's such, and I wouldn't call it a misconception. I just think people just don't know. Give us the range. What is the low someone can get to in a credit score, and what is the high?
Well, that's a little bit tricky. Okay, so and this will kind of lead me into, I'm going to speak to the most common misunderstandings of
Yeah,
credit, which is all of them. But I mean, but and the reason being is this is so many people are don't want to ask credit questions because they feel like they're the only ones that don't know. Okay, they feel like I don't want to ask a stupid question, so I'm not gonna ask it. I'm just gonna
sure.
keep on trudging on, moving forward through life. And what I try to tell everybody is ask whatever questions you have, because everybody has them. Most people don't understand credit. Most everybody anywhere doesn't understand credit, and the reason being is that nobody received any credit education. The number one issue with credit in our country is a lack of credit education. It's the number one issue there is. We can talk about all the different, every year and seasons and what have you, but it's always the same. Is nobody received? You didn't. I didn't. Nobody we know received any credit education in all of our
No.
school years. Maybe you took an elective in college. Maybe perhaps now in recent years, high schools are I hear that they're trying to implement more, I guess, financial literacy to curriculum, and that's great. But as far as credit goes, nobody got any credit education.
Right.
So going back to that question of yours, I need to preface with that because most people don't know. So if you're tuned in and you're hearing this information, you're like, man, I don't know that either. Yeah, nobody knows. Nobody knows.
Yeah,
I know, myself and my peers, we know.
right.
So it's, what is the score range in the mortgage industry is 300 to 850. Okay, in the mortgage industry. However, the number one misunderstanding with credit is, why are my scores different based on where I see them? Okay, be it online, by my credit card app, through Credit Karma, when a loan officer pulls credit. As it relates to the mortgage industry, real estate, every loan officer will tell you, every loan officer will tell you the same thing every single day. They have people that apply with them and they're excited and they're applying, but they don't have credit confidence. People with excellent credit, they don't worry so much. They know their credit's good. They're responsible. It's another topic I want to talk about later, is my coin phrase, credit confidence. It's a wonderful thing to have, but remind me of that later. Okay.
Yeah.
So it's when people are kind of like nervous and they're uncertain about their credit, because most people, with that are uncertain about credit, there's a reason there. They've been denied for something. Maybe they're denied for a credit card at TJ Maxx to save 15% where they're checking out, or they were denied for an auto loan or for an apartment lease or something. Or maybe they just see their Credit Karma app and it says it's bad. Okay?
Yeah, for sure.
And so people will be, they'll be, prior to applying with a loan officer for a home loan. Most people nowadays are going to check on Credit Karma or their credit monitoring app, whatever it is, or through their credit cards, and they're going to check their score first before they apply. And let's say you do that, and it's a 700. Problem is that those are not the same algorithms that the mortgage industry uses. Okay, so now the next day or today, I'm going to apply with a loan officer, and my scores that I saw online is a 700. But then I apply with a loan officer, and it's maybe a 600 or a 620 or 650. But it's usually less. Not all the time, but usually it's less.
For sure.
And so that's first and foremost is to make everybody aware, to not be shocked of that difference and why that is. And just to, for time's sake, the short reason for that, because everybody's listening in, is now like, well, why is that? Why are the scores different?
Why are they different?
Why are they different? Wherever I go online to the mortgage industry or my credit card, my look at my Capital One account and through my bank, and my credit says this, and it says it's a 700 or whatever, but it's different here. Why is that? And the short answer, the very simple short answer, is that different industries use different algorithms to calculate the credit bureau's information. Okay, the three major credit bureaus, TransUnion, Equifax, and Experian, are are individual companies. Okay, they're not the same, and they don't actually have anything to do with our credit score. And that's before anybody gets irate with that statement. They don't come up with a credit score itself. They're repositories of information. So creditors pay them, your credit cards, your lenders, your collections companies, whoever it is, they pay the credit bureaus to gather this information on our credit reports. And then in different industries, from mortgage to credit card, insurance, online, all these things we all know about, they all use different algorithms to calculate the credit bureau's information, because all these industries don't weigh the information the same, right?
Yeah.
Okay, so totally different. Mortgage is the most strict, right? And this is what you and I are always talking about, is the mortgage stuff. So mortgage is the most strict because a consumer is applying to borrow hundreds of thousands or millions of dollars. Okay, it's totally different than, again, applying for a TJ Maxx card when you're checking out to pay 15%, right? Okay, totally different. Or even for an $80,000 auto loan, or $60,000. For sure. Years past, this is what's interesting. I used to say $30,000 auto loan. That just doesn't exist anymore, does it? Right? But
no,
I know. But anyway, so $60,000 auto loan. It's totally different. Still, that sounds like a lot of money. It is, but totally different than being approved to borrow hundreds of thousands of dollars in a home loan. Okay, so with those online algorithms, those scores are kind of all over the board. But to answer your question, let's just stick with 300 to 850. Okay. Low is less than 500. Okay. I mean, that's kind of, less than 620 for a loan officer will tell you. And I'm not trying to speak too much for the loan officers tuned in. That's not my lane. I work with them. So we hear a lot, and I've got some good understanding, but I'm not a loan officer. So, maybe they're 580s or no credit score or, whatever, but on the average, I default to 620 is a minimum score that a loan officer needs to approve somebody for a home loan. I'll just default to that if I don't know anything else.
Yeah.
So to answer your question, what is a low credit score? So because of that, I'd say less than 620 is a low credit score. Okay. Truthfully, well, how about this? What is a high credit score? I would say over 700. Where everybody wants to be is over 700. Okay, 620. If we default to that from a mortgage standpoint, and loan officers, they like 620s because they can approve that loan. Yep. You're selling that property. You like it too. Like, hey, whatever you got to do, Joe loan officer to qualify this borrower to buy my property. Let's do it.
Yes, for sure.
Yeah, absolutely. Yeah. Everybody's winning. Everybody's winning. Loan officer closes another loan. You sell a property. Your buyer achieves their goal in working with you. Right. Yeah. But is 620 a good credit score? No, it's not. It is not a good credit score. 620. You're going to qualify for a home loan. You get in the house, and I'm not trying to scare anybody away. I'm just putting it in perspective. Okay. Yeah. I encourage everybody to be a homeowner, 100%. And let's talk about it. We can make it happen. Okay. But you qualify for a home loan at 620. You get into that home, keys in hand. Yeah. Everybody's excited. That's fantastic. Keep pushing on. But then, a month later, you go to your retail store, your department store, furniture store to get the appliances in your place and maybe some new flooring or whatever. And you're going to get denied for that credit card. You're going to get denied for that with that now lower score, less, 620 or less. So just to put it in perspective, 620 is, again, just using that as a default for a minimum score requirement to typically be approved for a loan. Again, just defaulting to that. Yeah. But over 700 is where everybody should strive to want to be. Okay. Sure. Now let's get back to and everybody's like, well, okay, Aubrey, if you're telling me that all the scores everywhere I see them are not accurate to the mortgage industry, Credit Karma and my credit card app, whatever. Well, all of those credit monitoring sites that most people by now are familiar with. Okay. All of those sites have some sort of meter on them, right? Red is poor credit. That's how you know it's bad, is because it's in the red. Everybody knows what red, yellow, and green means. Red is bad, yellow is caution, and green is good, right?
Yeah.
And then the other end is green is fantastic. If it's over here, yeah, the scores might not be accurate, but if it says you got excellent credit, chances are it's probably pretty good.
Yeah.
So that meter is relative. So people can take that and say, hey, look, what does the meter say? Does it say that if you're mid-range, it's probably needs work? Obviously, if you're below mid-range, it definitely needs work. But if it says excellent credit, high 700s, high 800 plus online, you're probably doing okay. Your credit's probably pretty good.
When you look at there's a lot of real estate agents tune into this, first-time home buyers, of course. There's this kind of common, I would say, theme that when you are applying for credit, if you're new and you don't have any credit whatsoever, you need to get 1, 2, or 3 trade lines to get a good credit score. What would you say to someone out there that's got 0 credit, never applied for any credit? How can they get started on the right path? Fantastic question.
No, first answer is don't go to your bank and ask to build credit. First answer. Okay. Don't do that. Okay. If everybody has no credit, or let's just start with no credit, but also just trying to build credit, the first question to ask yourself is, do you have any open credit cards of any kind? And if they have no credit, then no, you do not.
Yep.
If you have low credit scores or poor credit, maybe you've had credit cards in the past, but they're no longer open. They've since been closed, canceled, charged off, whatever. Okay. But you don't have anything open currently. Okay. I've been throwing this statistic around for a while. I believe it's accurate, but who knows, really? It's just to put it into perspective again, but 50% of consumers, American consumers, don't have an open credit card. Okay. I'm just going to throw that around.
That's crazy, but I believe it.
Right. Okay. Just throwing that around a little bit. I'm not saying that's entirely accurate, but you get it. Right. Okay. Sure. You're not the only one if that's you. There are so many people who have, number one, never had an open credit card because they're afraid of them for some reason. Well, we talked about a little bit about that last week. Or maybe they've had them in the past and they went bad somehow, or they're closed or canceled, charged off, or now they're collections and they don't have anything currently open. So the first question asked is, do you have an open credit card? If that answer is no, you need to start with building credit with an open credit card, which is called a revolving account. Loans are called installment accounts. Credit cards and lines of credit are called revolving accounts. Very different. They're different. Okay.
Yep.
Two major categories of types of accounts were scored on: revolving credit cards and lines of credit, installment loans. Okay. And this is what happens when you go into your bank. Most banks don't offer secured credit cards, which I'm going to talk about in a minute. So the one thing you really need to have is a credit card, right? Yeah. You need to have revolving, because credit cards or revolving accounts make up such a huge portion, nearly a third, really everything considered with nothing. It's like 50% of our overall credit profile opportunity. Okay. Like 30 to 50%. That's a lot. Okay.
Yeah.
What that basically means is if you don't have an open credit card, you can't have a high credit score. You can't. I'm not saying you're less than 620, but it's likely that you're less than 620. Okay. You not 100%, but it's likely that you're less than 620 if you don't have an open credit card. So the first step is the first thing that you need is an open credit card, which if you've got bad credit or no credit history whatsoever, is going to come by way of what is called a secured credit card. Has just as much weight as any other credit card, just a different method for which you can be approved for it. And that is, you're going to give them money, $100, $200, $300, depending on where you go, collateral to borrow against.
Yep.
That's why you can be approved for this secured credit card, is because that credit card vendor is not at risk of losing any money. You're borrowing against the money that you give them to hold. Okay? Yeah. And they're going to make their money with a monthly fee or an annual, or usually monthly fee, or some type of rate, right? And that's just the cost of doing business. That's the cost that's going to cost you to build your credit. Just do it. Just get it done. And then being added as an authorized user is the fastest way to not only generate credit scores, but improve or increase credit scores. If you are lacking positive trade lines, you don't have anything on your credit, you have no credit scores whatsoever, be added as an authorized user. That's the fastest way, and I don't want to say best way, but kind of best way. I'd say the best way, the ideal way to build credit as quickly as possible is to be added to somebody else's credit card in excellent standing as an authorized user. Excellent standing, and this is where it gets a little like this all sounds so easy just hearing me say it, but it's not as really as easy as some people might think it is, because everything goes down just per person. So, number one, you have to know somebody who's got an open credit card when 50% of consumers don't have one.
Yeah.
Right. So you got to know somebody that's got one. All right. That's 50-50 right there. Then the person that that's got one, it's got to be in excellent standing, meaning no late payments at all, and a low balance versus a limit. That's 50-50 again. Okay. They need to want to add you to it. That's 50-50 again. Okay. And then do they even report on your behalf to the credit bureaus as an authorized user? Nobody has to. Some credit cards don't. So that's again 50-50 again, maybe not 50-50, but again, percentages go down.
Sure.
So yes, it's definitely a way to generate and increase credit scores rapidly, as quickly as possible. And with credit, everything as quickly as possible means every 30 days, by the way. Okay. So we're talking so realistically, just if you don't know, and if no other information whatsoever, any manipulation to your credit is going to take between 30 plus days to register, essentially. Okay. Most creditors update the credit bureaus, TransUnion, Equifax, and Experian, once again, on a monthly basis. So every once a month. So yeah, I've been going on and on about that. Do you have any questions about that? I don't want to take up too much time with that one.
Yeah. Is it true? Because I've always heard that it's best because most people make their payments, credit card payments, between that 1st and the 10th of each month. So is it true then to have your credit pulled or checked after, say, the 15th of the month, so that those payments are reflective on that?
Wonderful. We're going to put a few things together right now. It's a great question. Okay. Yeah. You must have done this before. Okay.
A little bit.
A little bit. So every creditor, most creditors will update the credit bureaus once a month, but that can be, so we're going to say, I'm going to nix that between the 1st and the 10th. We're going to nix that. That's not true. It's every creditor can have a individual report date. Okay. This is a report date. The date, that one date that specific creditor updates the credit bureaus with new information, which is usually once a month. And so it could be the 1st, the 10th, the 15th, the 25th, the 27th, the 17th, anything. Okay. Any date. The easiest way is to turn over that credit card, call the customer service number on the back and say, hey, what is my report date?
Okay.
What is the date that you update the credit bureaus with new information? Okay. That's what you want to know. It's after that date now that you can expect that manipulation, that change in balance, that payment to be reflected at the bureau level. Does that make sense?
Yes. Okay.
Yep. So now we're going to put some things together, and this is where and why credit monitoring apps like Credit Karma gets a really bad rap. And it's a solicitation. It's advertising to open accounts. It is 100%. But every consumer should have some sort of credit monitoring service. Everybody should. I don't care who you are, really. Everybody should. If you've got, if you're financing anything anyway. So Credit Karma, is free, and it is limited, yes, but the number one reason why you want to have it is to be notified if ever of changes to your credit. Okay, if changes to your credit, or if ever your credit is compromised. Okay, the whole different segment is identity theft. It's a huge problem, massive problem. It used to be 10 years ago, 35% of American consumers would experience identity theft. It's got to be over 50% by now.
Crazy.
It's got to be, it's rampant. So identity theft is a real issue. And so again, that's the primary reason why everybody should use Credit Karma. Now that we know that, the scores are not the same as a loan officer, so we can just stop beating them up about that, because now we know the difference, right?
Yeah.
And but we can now use Credit Karma to then verify or confirm that that payment has posted as reduced on the credit bureau
Right.
level. Okay, so once I confirm I've made that payment, I know that my report date is today's the 4th, I think. So it's today's the 4th. So now I'm going to be monitoring my credit app to whenever that is updated as reduced. Manipulated, and then after I confirm that it's been paid down or changed at the bureau level, now I can advise my loan officer, who's instructed me to do this already, to go ahead and now pull credit. This is a pretty common strategy that we recommend to loan officers who are again most of the people, the consumers that we work with. We're trying to help them qualify for their home loan, and not just to simply qualify. You let in with it, the financial literacy and fitness and credit and all these things. Yep. But we also help making, lendable scores even better, because there's a big difference between having a 620 and a 780 or over. Sure. And again, I'm not a loan officer, so I'm gonna cut it short there. But there's a big difference in rate and what type of loan products you can achieve. Okay, so we're not just talking about people with bad credit, and I definitely want this to make it into this session we don't work with too many like absolutely irresponsible consumers, okay? Because those are the people that don't actually talk to us. Those are the people that don't take our phone calls, that don't call us back, that don't have the motivation or ambition to utilize our guidance, if you will. Yeah. So as far as credit improvement goes, we don't work with people who are irresponsible consumers very much. Okay. Now, certainly we do a lot to help consumers adopt better consumer habits. Now, that's a different story. Okay. They have to be willing to make the change. And that's the difference. Is somebody willing to learn, willing to accept coaching. I'm a credit coach, and we want people to be willing to accept coaching no matter what the level. If you're a 700, I'll coach you to be over 800. Right? Because 800 is the 800 club. We talked about that last week. It's fun. Yes. You're in it. I know who's in it. I can tell by the way how somebody carries themselves if they're in the 800 club. I can tell. That's that credit confidence. It's truly, and I always mention this because I believe it's true. Being a business traveler and a people watcher in airports, and we talk to people all day long, and I look, talking with people about their credit and loan officers all the time, interacting with people every day, all day long. 20 years later, start to be able to read people pretty well. Yeah. Right? So, so I can, if I'm at an airport and I'm just looking around the room, or in a meeting and I'm looking around the room and I'm talking about credit improvement, I can usually tell who's got, who would benefit from some credit improvement, right? Who's not in the 800 club, because it's my belief is that it's truly difficult. It's difficult to truly be confident if you don't have excellent credit. Yeah. And something that you asked a question previously is does credit matter? Who does credit matter to? It matters to everybody who can't pay cash for everything. That's credit matters to. That's it, right? If you can pay cash for everything, then you don't need to finance anything ever. Then we're not talking about you. Yes, right? For sure. But if you are not that person and you can't pay cash for everything, and you might need to finance something, even if it's just an emergency happens, and that now obviously natural disasters are everywhere and rampant. We're hearing about them more anyway. Yeah. So if your home gets wiped out, how's your credit? That's going to come into play. Yeah. I want address another question, because again, in the real estate world, mortgage, all things considered, you hear of people that are like, I'm going to go look at houses. And then the real estate agent's like, well, you need to get pre-approved first. So make sure you talk to, here's, my 3 lenders, make sure you talk to them. I've seen many, many times they go to a lender, maybe one that wasn't referred to them. They get their credit pulled. The score is, possibly whatever, 650. Mm-hmm. And then they call and they're like,
my score was, like you just said, a 700 when I looked at it. Now I went and applied for a loan and it's a 650. Now my lender's saying I need to get it to 700. Maybe I need to go apply it. And you see them have their credit pulled multiple times in a 2-week window, 21-day window. There's a couple of people have conflicting information. Some people say that as long as your credit is pulled by the same industry, like a mortgage, within a 30-day period, it doesn't affect your credit score rating. But then there are others that say, no, it's really a 10-day window and it always affects your score a little bit. And then you actually see people's scores when they do this go down dramatically and sometimes actually bump them out of even being able to get a loan. Why is that? And what's true?
So there's like 10 questions in there.
Yeah.
So let's try to unpack that a little bit. Yeah. I'm right there with you. I got you. It's another common question that many people ask is about the inquiry deduction. Okay. So let me just start off by saying, if you have any aspirations whatsoever of being approved for a home loan, just apply with a lender. That's first and foremost, just apply. It's the best comprehensive information you're going to get for free from anywhere. And obviously every lender is different. So, I'm not, one lender can be more knowledgeable than another is what I'm saying.
Sure.
But otherwise, you like going back to the initial question of what is my credit score? If online is not correct, well, what is? Well, okay, just have a lender pull it. If you're thinking about buying a home, just apply with a lender so you can eliminate all the hypothetical questions. They're going to tell you what your score is for free, by the way, because the other way is going to cost you. myfico.com, myfico.com is the only website where consumers can access their mortgage accurate credit scores for free. Not for free. Their mortgage accurate credit scores. It's not for free. There's a cost. I don't know. I'm not going to speak to it. This is not an advertisement for MyFICO. It's just, this is the one place where consumers can get mortgage accurate credit scores for all 3 credit bureaus with a soft inquiry. Okay. Soft inquiry. So the soft inquiry is just looking, like when you go to your credit monitoring apps, that's just a soft inquiry. There's no harm to your credit. They're just looking. You're not actually trying to purchase anything. Okay. A hard inquiry is anytime you're trying to actually borrow money in some capacity. Okay. In some way, whatever that is, that's a hard inquiry. Okay. So a hard inquiry, whenever anybody applies with the lender, in different industries can have different shopping windows, by the way. Okay. So different industries like auto and mortgage, they can have different shopping windows, and also depending on the different algorithm. And there's 50 plus different algorithms that can be used too. Okay. So let's just stick with mortgage. And this is a really difficult one that I have a hard time putting my name on, to be honest with you. I'm extremely confident in my knowledge of credit, but you're going to be hard pressed. Anybody who wants a challenge to go find actual definitive proof of what we've conducted studies that we believe that there's a 30-day shopping window in the mortgage industry from the first credit pull to 30 days later. You're only going to suffer the initial hard inquiry. Okay. Again, like I said, I have a hard time putting my name to that because we've conducted studies within our company over the years, and I've questioned it a lot. So anyway, we believe it's 30-day window shopping window of the mortgage industries. Now, getting back to the hard inquiries. Okay. I've said this a lot jokingly, but in all seriousness, is I wish that borrowers were as afraid of a late payment as they are of a hard inquiry. I wish.
Yeah.
Okay? Because hard inquiry is a necessary evil. You're going to have it. It's going to have to happen. Well, not necessarily now, because sometimes mortgage lenders can soft pull credit now, but it's usually just one bureau, so it's limited information. You can get kind of an idea, and that loan officer who's good at their job, they can now they can check off all the other boxes, whatever they need to talk about, documents and assets and income and all that stuff, right? But typically, what for real is going to be a hard inquiry with a loan officer, and that's all 3 bureaus. Our score is whichever bureau is in the middle, by the way. It's not an average. People commonly think it's an average of the 3 scores, and it's not. There's a bureau with a high score. There's a bureau with a low score. Whichever bureau is in the middle is our credit score. Okay. And everybody was like, well, why do they have different scores? Because not not every bureau is receiving the same information. Okay.
Makes sense. Yeah.
Credit is all about cost. Okay. Credit reporting is all about cost. It's a moneymaker. Okay. Creditors have to pay the bureaus to gather information, to gather their information, to put it onto their credit report. The creditors have to pay the bureaus to do that. So because they have to pay, nobody has to report. Okay. So you can have clients that say, well, hey, I'm looking at my credit report and my auto loan isn't on here and my mortgage isn't on here. They don't have to report. No, they're not on there. Okay. Judgments and tax liens no longer report to the credit bureaus, by the way.
Nice.
Okay. But you still have them. They just don't, you're not going to see them on your tri-merge credit report. Okay?
Interesting.
Yep.
Okay.
So the loan officer will use a supplemental service that will find the public records or a title search, for example. But yeah, the judgments and tax liens have discontinued reporting to the bureau several years ago. Don't remember the exact year. But anyway, so getting back to that hard inquiry stuff is have the loan officer pull credit, but that hard inquiry is a necessary evil that has to happen. So just it's going to be, we always say on the average of 2 to 5 points, but it has to happen. So just go ahead and do it. Right? It's the best comprehensive information you're going to get from a good loan officer as far as eliminating all the hypothetical questions. Well, what is my credit score, and how much am I going to be able to shop for, and what size house am I able to take a look at, and when I get pre-approved, these. So the loan officer is going to be able to give you all that information for free once again. Okay. The other way is to go to MyFICO just from your mortgage accurate credit scores, but that's going to cost you a monthly service fee. You can go look at that on your own. But I recommend it. I recommend that to my clients who are kind of on the runway, to home ownership, and they're making improvements to their credit, but they're waiting until they get to that certain number.
Oh yeah.
Right. Okay. So that's every day for us. That's every day. They're waiting to get to a certain number.
Yes.
Everybody's waiting.
Yes.
And, well, okay. So there's all different types of information that we're going to review and infer from, but otherwise, we'll say, hey, just spend the money. It's worth it. Okay. To have MyFICO until you get into the house and keys in hand, then you can cancel it. But this way you can know exactly what your mortgage score is on a monthly basis. Okay. Now, so the hard inquiry though, again, is, and I'm going to jump in with this little nugget. Okay. This is because it's so important to me for everybody to hear, talking about the hard inquiries. On the average, we say it's 2 to 5 points, okay, for the hard inquiry whenever a lender pulls credit, which everything else all the other reasons why you don't have a perfect credit score, an 800 plus credit score, are more damaging than a hard inquiry. Okay. All the other reasons are worse than the hard inquiry. So, and that's what, to have an 800 plus credit score, and nobody's going to be 850 exactly. It just doesn't, it can't happen. And there's a different answer a different day, or explanation, different day. But over 800 is perfect, and whenever, or excellent anyway. And anything less than that there are reasons for that that are listed on a credit report. And I can tell you this by reviewing your credit report. I can tell you the reasons, and all of them are a bigger impact than a hard inquiry. Okay. Now, this is what I think is most unfair about credit reporting. Of all the things that are unfair, and credit reporting is not racist, by the way. I hear that a lot too. It is not racist. It doesn't think. It's just calculating numbers, and credit is all percentages, ratios, and recency. It doesn't calculate the name of the creditor. It's just percentages and ratios.
Yeah.
So there's no set amount of points up or down for anything. And I hear the 20 points for this and 10 points for that, and 100, it's going to be 100 points for this. No, it doesn't work like that. Okay. Any amount of points up or down, gained or lost, improved or declined, is relative to your starting credit score or profile today. Okay. Yeah. So I've got 800, I think it's 825 on my credit monitoring. So I've got over 800 credit score, and I have no derogatory information on my credit report. Okay. If I have one late payment on anything. It doesn't matter what it is. If I get a $10 collection, it doesn't, credit has nothing to do with numeric or monetary values. Credit, again, is all percentages, ratios, and recency. Dollar amounts doesn't matter to credit at all. Okay. We can explain it using dollar amounts, but it doesn't actually matter to the algorithm. All right. So a $10 collection weighs just as much as a $10,000 collection. Okay. It's the recency that hurts us the most, the recency. All right.
Okay.
So I've got 800 plus credit scores. I have no derogatory information on my credit. I have one late payment on a Kohl's card. I have one $10, collection for whatever. My score is going to drop over 100 points. It's going to boom. Right?
Yes.
Yeah, right.
Yes.
I mean, it is shocking.
Yes.
I've had a mishap where it actually happened, and I'm telling you, I was shorter that day. Okay, like it is shocking.
Yeah.
When people with excellent credit, we don't want any blemishes. We're proud to have an excellent credit. It takes some work, responsibility, and if there's a mistake for some reason, and the credit bureaus are really difficult to work with, extremely difficult to work with. My score is going to drop 100 at this stage. This incident was 130 points for a late payment.
Substantial.
Yeah, I mean, gigantic, right?
Yes.
I mean, I've had clients that were no longer able to close on their loan because of something like this.
For sure.
Or some event like this, but that same late payment, that same $10 collection for somebody with sub 620 credit scores, a 550 or 500, it's going to be a few points. That same thing that was extremely damaging to me because it's uncharacteristic of my credit profile.
Yes.
Right.
Yep.
But for somebody who has a low credit score, it's not uncharacteristic.
That makes sense.
Right. Okay.
Yeah.
So everything is relative. Everything we do is like, how many points am I get this question all the time over all the advice that I'm giving anybody. Like, well, how many points am I going to get? How many? Well, we're going to just have to wait and see. We're just going to have to wait and see what it comes to be next month.
Yes.
Or the next reporting date. Anyway.
When you look at, because I want to give everyone, because y'all, we can go on and we will. Yeah. We'll do another segment on credit, but I know I want to keep everyone aware of their time. When you look at right now with, the housing affordability is a big crisis. It is a problem, and people are in debt. And when you look at the guidelines, mortgage used to take up about sometimes 50% of their income. But now that homeowners insurance is so freaking high, it almost matches their mortgage payment. Then when you couple that with credit card debt, people are just drowning. But we're in a world right now where there's a massive amount of opportunity for buyers, first-time home buyers, seasoned buyers, any buyers to get into the housing market and get a really great deal. Well, some of them are just a little bit below where they need to be. So what do they need to do to their credit now to not miss this?
So I mean, that's going to be a specific advice specifically to that consumer.
For sure.
There's nothing I can really say there other than let's get in contact.
Generalize.
Let's get in contact. Let's talk about it. I can just ask a few questions and kind of get a better grip for where you're at, what position you're in, and then give advice. And I really only feel comfortable giving specific advice and reviewing your credit report as far as what to open or close or pay something.
No, not like that, but like general guidelines.
So generally, this has been my message all year. Last 3 years really is in a credo that I live by, and I'm on board with the fitness deal too, and getting up early and
sure.
And putting in time. But my little credo is don't get ready, be ready. That's my motto. Don't get ready, be ready. Right. So everybody who's waiting right now because we've all heard this, industry professionals have all heard this for the last 3 years. People are waiting for rates to come down. They're waiting for this, that, they're waiting for the tariff stuff to level out, whatever. We go on and on and on. Right.
Yep.
So my message is, well, what if this is the lowest rate today? What if this is the lowest rate? Well, then now's the time to go, right? Because if the rates aren't going to, and I'm not saying, I don't know, nobody really knows this.
No,
good Lord, no. If the rates don't decrease, then today is the lowest rate, right? So get in now. As a real estate, a loan officer and working with loan officers as a real estate agent, the loan officers, they're probably, and again, I'm outside of my lane, but they're probably saying, well, let's make the payment work. Okay. Let's make the payment work. Okay. The house price and whatever, the insurance and all that, a good loan officer is going to find a way to make the payment work. And that's what you're borrowing is the payment. Okay.
Yep.
So if just assume that today is a low rate for a long time, then get in now. Okay. And then as every loan officer is going to tell you, if the rates do go down in the future, then refinance. Okay.
Yeah.
Right. And to that lower rate. So that's the general rule. So now is the time. But to answer your question, if you're not ready to go today, okay, after hearing that message, you're like, dang, that makes sense. I'm going to go and apply right now. Yeah, because you should.
Yes.
You absolutely should, at least to know where you're at and know exactly if you qualify or not. You should definitely do that today with your favorite loan officer that or that Trisha recommends. But otherwise, do it. And if rates do come down in the future, whatever, then yes, then you can refinance to that lower rate. But that's my message is to if it works, if the payment works for you, if that's in your budget, then you should. I mean, that's how, in real estate, this is how consumers leapfrog or lily pad into generational wealth, right? This is how you get in theory, the big chunks of money is by upgrading homes moving forward, right? So you got to start someplace, okay? So start small if that's the case. Start just if you make conservatively now, and then continue to move up as you progress in life. But at the same time, if you're not ready now, that's who I want to talk to. Okay. So who you're not ready now, and you believe that you do need some credit improvement, and your score on Credit Karma is less than 650 or less than 620 for sure on Credit Karma, then yes, we definitely need to talk, and you probably need some improvement. It could just be some good advice that I give you for free. Maybe we go to work for you regarding any derogatory information, but let's just talk about it first. Okay. We always we talk about it first. Free consultation, to talk about it first. But the point being is if you're not ready today, the time to improve your credit and to start getting ready is today. It's sure. Today. Okay, it's not tomorrow. That's procrastination. Tomorrow's procrastination. It's today. So let's get started today. So if you're waiting for rates to come down, we're back to that again. And if they do come down a couple points, it's going to be a feed-in frenzy, right? Yeah. It's going to be chaos. You need to be ready to go right then and there. What you don't want to be is the person when that happens, and now you're like, well, let's start and getting ready, right? You don't want to be that person. Don't get ready, be ready. Get started. The time to improve your credit, and I'll just stay in my lane now. The time to improve your credit is always today. Is always today. I don't care what excuses you want to give yourself or make up. We've all heard them. We've all got them. I give myself excuses all the time too. But as far as credit goes, the time to start acknowledging, improving and acknowledging your credit might need some improvement is always today.
So would you say a general rule of thumb would be 0 late payments, especially in the last 12 months? If you can get your credit card, your revolving credit, your balances on those at 50%, really they need to be at 30% or less. But for some people that's extremely hard, but maybe 50% or less. And then focusing on maintaining, making your payments early rather than on time. A week early.
So that again, that we're unpack that real fast. That's a good one. This is a really good list that you've got there. Yep. Yes, you definitely don't want to have any late payments. So make certain that you're paying all of your bills, 100%. The late payment is the killer. I'm going to tell you that right now. What hurts us the most is the most recent derogatory, which means is negative information. I'm supposed to say derogatory, but let's say negative. Okay. Yeah. The most recent negative information hurts us the most. So you could have a bankruptcy on your credit report right now. You could have a repossession in your credit report from years past, whatever. But you have a late payment on a credit card, anything this month or next, that's the worst thing on your credit report, the biggest negative impact. Okay. So you can't have any late payments moving forward. That's the killer. If you have, let's talk about it. There are things that can be done and we can work, find other areas to improve. but let's just talk about it. Okay.
For sure.
So then as far as don't open or close anything without my advice or a knowledgeable loan officer's advice. Don't open or close anything. Don't pay anything off. Don't be in a hurry to pay off your auto loan, which is a common mistake. Don't do that. Or your student loan that's only got a few thousand left on it. Don't do that. Just don't do anything other than pay your regular bills on time. And I have all of my accounts set up on auto pay or auto draft, which I highly recommend everybody does. Even if you're responsible, I make all my payments on time, and I just don't carry high balances, but set all of your accounts on auto drafts. So you don't accidentally have a late payment. I mean, I hear about it every day. I'm telling you, every single day, somebody's contacted me with this problem, and it's not an easy one to resolve. I can tell you that right now. Okay. So then as far as credit cards go, definitely that's something that you can be doing. And I'm happy to advise specifically as far as where your money's going to be best spent to get the biggest bang for your buck to your credit score.
Yes.
But otherwise, without that, because again, I can do that very easily in 5-minute phone call. But otherwise, everybody can certainly reduce your credit card balances, which again, like you mentioned, thank you for reminding us, is credit limits don't matter. Okay. A $500 credit limit weighs just as much as a $5,000 credit limit to your credit, to your credit report and score. How we're scored with credit cards, not loans, credit cards, is a percentage of the limit you're using as a balance. This is called debt utilization percentage. Okay. What percent? And like you rattled off, it's common. Generally you want to be less than 30% per individual account. It's not collective. On many credit reports, it's going to total up all of your 6 credit cards with an overall collective debt utilization, but it's per individual account. Okay. Per individual credit card. Right. So you want to keep your credit card balances less than 30%, but the lower, the better. That's just the general. Above 30% is really not helping you very much.
Yeah.
Okay. 20% is better than 30%. Where you really want to be is between 5 to 10%. Okay. That's the sweet spot. Okay. Next question everybody always asks is it better to pay it off to zero or leave a little on it? There's nothing negative about paying it off to zero. However, you are in fact going to earn more positive points reporting some minimal percentage other than zero. Okay. Because now you're getting positive points for usage or activity. We say activity. So that's where 5 to 10% is the sweet spot where you're probably going to be earning the most positive points for that individual account. Okay. Good. Now, as far as definitely do not, unless we talk about it first, and it's a last resort, but do not enter into a debt consolidation or debt settlement program. That's terrible for your credit, and no loan officer is going to approve you for a loan if you're in or recently completed a debt consolidation program. Okay. Yeah. So don't do that. That's not good for your credit. Now, there is something called a debt consolidation loan, and that's a totally different story. Okay. Yeah. This is for folks that are struggling with credit card debt at high interest rates. I can give some good advice and talk about, okay, well, let's find ways to improve your credit a little bit so you can be approved for a debt consolidation loan. So you're going to open up a new account in the loan, which is not a credit card, by the way. It's called an installment account, not a revolving account. So you're going to open up a debt consolidation loan to pay off all of your credit card debts. Now you're moving all of your credit card debt to this loan that you're paying off at a lower interest rate than your credit cards, because your credit cards are outrageous. Definitely. That's probably 20-something%, 24 to 29% interest on your credit card. Okay. Yeah. That's where the vicious cycle comes in of not being able to dig yourself out. So you're going to move all that credit card debt to the debt consolidation loan at a lower percentage rate. Even if it's 13%, it's better than 24, right? Yeah. Okay. But now you've just improved your credit score because you've eliminated all that. You're earning more positive points now that you've greatly reduced or eliminated your credit card debt utilization percentage. Does that make sense? Yeah, definitely. So the points gained in eliminating all of your credit card debt is going to be more of a benefit than now somebody would say, well, now he's saying, oh, if you open up a new account, your score is going to go. But yes, if you open up this new loan, every new account, your score is going to drop with the first month of reports until it's reported for 3+ months moving forward, then it's going to now benefit you. But the benefit of moving your credit card debt to this lower interest loan is by far more beneficial than not being able to dig yourself out of this high interest credit card debt. And you're still going to be able to potentially qualify for a home loan when the dust settles, basically.
I'm going to have to stop you there because we're on our timeline, and we could, again, there's like so much to credit. So we're going to do another segment, you guys. But in the meantime, Aubrey, there's so many people out there that don't understand credit repair, they want to go deeper into what you're talking about. How can they get a hold of you? Because you guys, there's a misnomer here too, that it costs a fortune for credit repair. It's very affordable, isn't it, Aubrey?
Yeah, absolutely. Well, it starts with the free consultations. Let's just talk about it first. Again, let's start there. Talk about it first. Our service, we're a national firm at UQual. And it's not just, I say credit improvement, by the way. Credit repair is kind of the bad words.
True.
We want to, there's just so many crummy credit repair out there, and now there's software that people can buy. Credit Repair Cloud is what's called. What I just gave a plug, but don't do that. But basically, everybody on social media is credit repair now, like on TikTok and Instagram, and I mean, I see it every day. And loan officers and realtors are always forwarding me these things, like, no, run, red flag, right? So we are a fintech platform, so we're a financial tech company. Most of our clients are referred to as starting with a need for credit improvement, because most of our clients are trying to buy one of your properties. Okay, they're trying to be approved for a home loan. But we're also going to address the other aspects, and we're going to help folks who need it. Not everybody. It's not everybody who needs it, but for many first-time home buyers and folks that would benefit from better consumer habits, we're going to coach them in that. Okay. For people who say that money's tight on a monthly basis, I've got my money's going to my rent, my auto. Auto loans, $1,000 for whatever, that's ridiculous. Yeah. But anyway, so we're going to say, hey, look, we're going to show you where you're wasting where you have wasteful spending on a monthly basis. So we're actually going to help people find more money that can be saved to reduce their debt, to reduce their credit card debt. But not only that, but also more importantly, to save for down payment. Okay. And whatever closing costs are, whatever that is, that's not my lane again. But we're going to help people find that money in their wasteful spending on their monthly income, so that we can put a plan together, what I say is an action plan of achievable goals, and get them on the pathway to get them to the finish line, which in this case is home ownership, right? But as far as contacting, are you going to throw up put up my email address or my phone
It'll
number?
Get out in the comments, but give it to them now too, or any way they can to get a hold of you.
So I think the cell phone number first would be best, and that's 314-971-7705. Again, 314-971-7705. I do live in Georgetown, Texas. I did go to school in Missouri. That's a St. Louis area code. Just never changed it decades ago. I don't want to age myself here, but that's my cell phone, and you contact me anytime, 7 days a week. Otherwise, my email address is, my middle name is Aubrey, which I use, obviously. My first name is actually Alan. So it's Alan, ALAN.Aubrey, AUB is Bravo, REY, .Kloss, KLOSS, at uqual.com. And uqual is UQUAL.com. But again, just feel free to reach out. I always say, don't be shy and say hi. Even if you're an industry professional, we're in a commission-based industry. So again, you're not the first one to let me know that you need some improvement. And again, it's just, I give a lot of just free advice too.
For sure.
Yeah. Let's just start with let me give you free advice, and we'll go from there.
And you guys, real estate agents, homeowners, home buyers, whatever you are, like, watch for the comments so you can pull his info off of there. If you didn't get it, make sure and tune in. We're here every Monday, 12 p.m. Central Time Standard, 12 p.m.-ish, I should say. 12 to 1 is usually our time, our broadcasting time. So questions about real estate, questions about credit, reach out to both of us. If you lose his contact info, reach out to me. I will send it to you. You guys have an amazing day. Like, we're here to bring hope, positivity, and let you know that we can all do better, because together we rise, together we thrive, right? Thank you,
That's
Aubrey.
right. Thank you so much. That was a lot of fun, and I look forward to our future segments. There's a lot to talk about.
Oh, there is. You guys protect your credit, and y'all have an awesome day.
Thank you. God bless you. Thank you.
Bye, guys.